Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is November 15th, 2018, and I'm going to take a look at RBOB today, the ETF being UGA. Basically, crude and RBOB virtually doing the same thing, but there's more alerts that are popping up here in RBOB. First, the trend is still to the downside. Anybody that has been short has been enjoying the trends. The technical indicator for both markets are pointing to the downside, but what we're seeing is perhaps a little bit of a bounce here in the seasonal tendencies of RBOB. We've got a slow low that is occurring at the elastic level, and we have a sub low for the power level. So basically, there's a bit of a bottom that's going to form here, and I think that for the most part, I'm not saying that the market is not going to continue to the downside, but I do believe that we're going to start to see a bit of a base here over the course of the next couple of weeks, and then we'll start to see the next slide to the downside. So this presentation is really just saying that the quote-unquote easy money on the short side is coming to an end. We'll go into a consolidation, and then there's probably going to be a little more of a sell-off over the next couple weeks or so. So with this slow low on the elastic level and the slow sub, those are both indicators that occur on the secondary note. We always have the first indicator, and then we have a second indicator for in both instances, and that typically means that it's gotten a little ahead of itself. It's going to base here, and it's a little more reactive when you have these particular pop-ups here, these alerts for the elastic level and the power level. We also, just with yesterday and with crude, we had some lows that occurred here, basically telling you to take profits using the surge low indicator. In that particular instance, we also had it for heating oil, and then with today's action early on, we had the high that occurred in natural gas, which just completely fell out of the bed here. We had a number of indicators that popped up there, but specific to the RBOB. We definitely have that low that is popping up here, and we would expect the market to base a little bit. If we take a look at the seasonal tendencies and we take a look at the top markets, we've got three energy markets, RBOB at the top, crude and London gas oil. And what we're looking at with RBOB is that it's very, very closely following its seasonal tendencies. So what I thought I would do is I'd show you the specifics here. Here is, I'll start with this, the 5-year. You can see that as of yesterday, that it was tracking its tendencies. That's what this gray area represents. The blue is the 5-year seasonal tendencies, and the black line represents up until yesterday, last night, the market's reaction for the entire year. And what we were expecting is a little bit of a base here for the market for the next couple of weeks before we'd have a continued little sell-off, another little bounce, and then a sell-off in the early part of next year. This is kind of planning things out a little bit. If we look at the 10-year notes, it's a little more pronounced. It's looking for maybe a little more continuation to the downside, but not much. You can see that the trend is coming to an end. A little bit of a bounce, that's what I was talking about for the next couple of weeks, and then another sell-off, and that sell-off is probably going to begin, we'll just kind of roughly say December 1. So just bear in mind that the market is coming to the tail end of the easy money, bounce, and then another sell-off, and then we'll kind of reconvene after that sell-off concludes itself sometime in, call it mid-December or so. So that's where we kind of stand there. If we take a look at the market itself, you can see RBOB based on daily bars. This is that pronounced sell-off. Now, this is really not stopping with any support whatsoever. If you kind of look back here, and if we look at the weekly charts, kind of a similar type condition, with the exception of this little one right through here. So if I pull up the cursor, you go straight across all the way over here. This is the only support to the market, it's weak. So you can see that we've got some 34s and 21s and 46s and 50s all over the place. The one that is the weakest is where it's stopping right now. So again, if we do find a little bit of a base here on the weekly, and that's a big if, and we get a little bit of a bounce, I still think that we're going to have a continued sell-off. But the fast, easy money, that big trend, I think that it's based almost exclusively on the seasonal tendencies, that the market is probably going to base here a little bit and give us eventually another opportunity. The fact that the market is just so severely oversold and coming up to at least a little bit of modest support here, and the seasonal tendencies beginning to bounce, I would suspect that we're going to see a bit of a retracement or a little bit of a follow through to the upside, and then most certainly be able to put ourselves in a position to take advantage of another sell-off. So this isn't really short-term trading. This is more of a longer-term forecast, just trying to give you an idea as to where the market theoretically could go. Now, referring back to the support and resistance levels, one of my favorite charts is to look at the targets, the upside and downside targets. I'm just going to point out that we have strength, that's what the S stands for, and the C refers to count. How many support levels do we have? 1. And how strong is it? 12. Not very strong. 53 and 2. Pretty weak. 32 and 1 weak. 17 and 1 weak. So there's not really a lot of support to the market. Just as a reference, so the strength of 130.31 and a count of 4, that's pretty good. A count of 4 and a strength of 95, that's pretty good. Just because we have a number of counts, a number of reference points, if you will, that tell us that we're at that. So there's more resistance than there is support to the market. So with the sell-off that we have been having, we better find a little bit of a support to the market, bounce to the upside, find resistance, and that's where I think that we'll see more of a continuation to the downside. Now the systems, we don't have any systems for RBOB listed on the website, but if I use crude oil as a reference, we're still short the market. There was a little bit of a bounce in crude oil, not much, but at least some. And from that perspective, I think that we're probably going to see it slow down as far as the sell-off a little bit. And I guess I'm hoping that we get a little bit of a bounce and then that continued sell-off that I've been referring to. So there's enough indication that things should slow down a little bit to the sell-off, and just simply bide your time, keep your powder dry, and look for another shorting opportunity in as much as a couple of weeks or so. So we'll see how things kind of play out with that particular situation. Sometimes I go into the nitty-gritty on the short term. This time I wanted to be a little bigger and look at a larger term time frame, just to give some of my other clients that were looking for a longer term perspective. So see what happens here with crude oil and with RBOB, and we will take a look at some more markets soon enough. Thanks very much for watching. Bye-bye.